What's up, weirdos? All right, listen, we're going to venture into the question that's been going around. Are we entering a recession or a bear market? Is this possible? Let's have a look, okay? We're not going to dive too deep into the bubbles because we got quite a bit of stuff to go through, and I don't want to make this video too long. So looking across the market, guys, some things pumping, some things dumping, just kind of sideways, choppy, whatever action. Nothing, no extreme flash crashes or anything like that. We'll look over at Bitcoin. We got about, from the time I'm recording this, we have about 8 minutes until the daily close. So let's have a look at what Bitcoin is saying on the daily time frame. Looks like we're going to close above 82K, which is, good depending on what you want. I'm kind of hoping we can move down and get this dump over with between 69 and 74K. But as of right now, it looks like we're going to close again above 82K. We're closing at 82.8. It looks like, unless we see any kind of a significant move to the downside in the next 7 minutes or something. So not bad, guys. I think tomorrow should be very interesting. We got Powell speaking tomorrow. Will he be hawkish, dovish? I guess we'll see. Should be interesting, right? Should be interesting. Okay, so let's get into some of the stuff we're looking at. A couple of quick updates, though. This here from Zebek. Guys, check it out. Crypto shakeup alert. Zebek just leveled up big time. Real-time payments, Web3 debit cards, and a $70 million market cap. Could this be the next crypto giant? Don't blink or you will miss it. Check it out, guys.
Zebek is evolving fast. What started as Zebek Protocol has now transformed into Zebek Network, a next-generation infrastructure designed to power real-world transactions across Web3. But here's the real question. Is this the missing piece that finally brings crypto into everyday life? Think about how we get paid today. Bi-weekly paychecks, slow transfers, waiting days for money to clear. It's outdated. But what if your paycheck flowed to you in real time, second by second? That's what Zebek is building. A system where money moves as fast as information, like a river instead of a trickle, and they're not doing this alone. Backed by giants like Coinbase, Circle, and Solana Ventures, Zebek is integrating blockchain payments into businesses worldwide. Already, 50,000 users and 250 companies are using it for payroll, payments, and even Web3-enabled debit cards. Now, here's where it gets interesting. Zebek's token, ZBC, is evolving too. It's upgrading to ZBCN, but there's no new supply, no inflation, and no changes to tokenomics, just a stronger foundation. With a market cap of only $70 million, could this be one of crypto's most underrated innovations? But the bigger question is, will businesses embrace this shift? And with Zebek's multi-chain, no-fee debit card, could spending crypto finally be as easy as swiping a Visa? The future of money is shifting. Zebek is making its move. But do you think crypto-powered payments are inevitable? Or is mainstream adoption still too far away? Remember, this post is brought to you by the Crypto Chrome. Follow, share, and repost.
We are so excited about Zebek, guys. We got in early on this project over on the Patreon. That's why you got to get over there, guys. I'm telling you, especially if you're new, we're dropping gems left and right. This is going to be a monster project, in my opinion, guys. The run that we saw on XCN a few months ago is nothing compared to what we're going to see on Zebek, in my opinion. I'm just telling it like it is, baby. We find these gems over on the Patreon. We get into them early, and then they just explode. That's what we do, baby. Courtesy of Blake, guys, friend of the channel. He says, there was a question from overseas about the progress with Jasmy and Panasonic. Hara and the team are currently developing a control platform from IoT devices in home appliances, and as an application of that, an entry system and security for all in-vehicle device control platforms. So last March, we know that Panasonic and Jasmy announced this massive collaboration, partnership, if you will. And we know that they're building out a platform right now to integrate all of Panasonic's IoT devices into Jenkins Layer 2 PDL ecosystem. So we're waiting for more updates on that. Hopefully soon, guys. It's been about a year now. So let's get this platform out there, guys. That's what I want to see. That's what you want to see. And real quick, shout out to the channel sponsor before we move on, guys. Decent Wallets. Make sure you get one using our link down below for a fantastic deal. They have new listings for some new projects, guys, that they're now supporting. A couple that we've been looking at over on the Patreon that we've been accumulating, i.e. Cookie, fantastic project. They're supporting Telcoin now. So Cookie on BSC, Cookie on Base, Ethereum XPRT. And yeah, so that's what we're looking at for the Decent self-custody wallet, guys. Get yours today. Again, fantastic deal. Shout out to them for sponsoring the channel. Use the link down below. Get an amazing, amazing deal. All right, continuing on. What else do we have? Are we headed into a recession or bear market? So per Cointelegraph, they say new. Crypto Quant CEO has announced that Bitcoin has entered a bearish market phase with expectations of a 6 to 12 month bearish or sideways price movement. Further into that, I want to know what you guys think about that. Are we going to go sideways or down a little ways further for the next 6 to 12 months? But following up, Ed Yardeni reveals why he's lowering his S&P 500 year-end targets to 6,400.
Markets, we want to bring in Ed Yardeni. He's the president of Yardeni Research. And Ed, this is a rare time when you're actually in studio with us, but you've got some pretty big calls, so I'm glad you're here to go through some of these. You are lowering your S&P target for the year by about 9% to 6,400 from 7,000 before. It's directly because of what is happening with tariffs right now?
Absolutely, and that obviously relates to valuation. Valuation has been stretched, everybody knows that, but the outlook for the economy was pretty good until we got hit by this tariff issue. And it looks like it's not going to go away anytime soon, so surely valuations aren't going to stay as high. And they have, in fact, come down. For the Magnificent Seven, they're down from 30 to 25. For the S&P 500, they're down from 22 to 20. So I've adjusted for valuation. I still think the economy is going to prove to be resilient as it has been for the past 3 years. And if that's the case, then the earnings story should hold up, but the valuation story is not as strong.
Directly because of additional prices that might work their way into erode manufacturers' margins?
Well,
or because of an economic slowdown?
Yeah, good point, Becky. I mean, 2 weeks ago, we raised the subjective odds of a recession from 20% to 35%. So, I'm realistic. I look at the data. We are saying that the tariff.
So has Trump pushed things back 6 to 12 months in terms of a bull run? And they have increased the odds of a recession from 20% to 35%. What do you guys think about that?
Issue is unnerving consumers. And they are concerned that the price outlook isn't for them to come down. I think the president has scored some good points here in terms of seeing energy prices coming down somewhat. Clearly, the tariffs have worked with regards to pressuring Mexico to deal with the southern border. And another important development here is that with all the turmoil on tariffs, there has been some really good consequences for the rest of the world. China is actually stimulating the consumers, which is what American policymakers have been trying to get the Chinese to do for a long time. And the same thing with regards to Europeans.
Spending more money.
So China, because of this, has started stimulating the economy to try to incentivize consumers to spend money. This is money printing, guys. This is actually good.
Which then gets into explaining why the bond yield is so sticky here at 4.3%, because bond yields are going up around the world. So, I think America is exceptional in many ways. One of the ways is we have a lot of debt, we have big deficits, and now the rest of the world is joining us in that regard. So they're going to have some exceptional deficits and debt, and that's actually a positive, at least in the short term, for global economic growth.
And I should point out that 6,400 for the S&P 500 is still a long way from where it is today at 5,600. So you're still looking for gains at the year. When do those gains start to pick up? Do you think we've hit the market bottom yet?
Well, I thought late last year, early this year, that the market would be choppy in the first half of the year. It's chopped us up pretty good. But I think by the second half of the year, a lot of the uncertainties about tariffs, I think there'll be negotiations going on. Some of them will lead to lower tariffs instead of higher tariffs. And I think by the second half of the year, we'll see the economy continue to prove its resilience, earnings hanging in there pretty well. And so I think that the second half is when the market moves ahead to new record highs.
I mean, theoretically, most countries that still have large tariffs against us or levied on us are not in a position to pick a fight.
Exactly.
With us. And the reciprocal deal, the end result could be some of those tariffs are either cut or taken off completely.
Exactly. And I think that's, I mean, it's conceivable that the market is bottoming now, anticipating all that, because everybody knows that you don't want to go long the market, or you don't want to be buying when April 2nd, we're going to have a slew of reciprocal tariffs, and the president will be talking about them. I've observed of late that any day where the president doesn't talk about tariffs is a good day for the market, and that's why Friday was up, because he wasn't talking about it. But I'm also saying that despite the fact that he's continuing to hammer home the tariff issue, the market's down some today, but so far it doesn't look like it's going to be a terrible day.
We should, any USMCA compliant things we should not tariff, we should not put on, and
So will the markets crash on April 2nd, first of all? Secondly, which direction do you guys think it's going to go in? I've presented both sides to you here. Crypto Quant believes we're going to spend the next 6 to 12 months in a bearish phase. Over here, Yardini thinks, Yardini believes that we will see a bullish second half of this year, which would begin in 2 to 3 months. So, which is what we've been anticipating all along. But what do you guys think? I'm presented both sides to you. I want to know what you guys think about it. And as always, guys, Patreon been absolutely exploding. Listen, if you're new to crypto, if you've never been through an altcoin season before, you've never been through a bull run, there is no shame in having your hand held by one of the largest communities in crypto. We can help walk you through this altcoin season, know when you should be buying, when you should be selling, when you should be compounding gains, rolling profits, and so much more. Get over there to get the help that you need, guys. You can also book one-on-one coaching calls with me personally. That comes free with your Patreon membership. And we do live streams over there every single night. So check it out for yourselves, guys. You have nothing to lose and everything to gain for the price of a Happy Meal. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys in the next one.